Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about earnings call preparation and what goes into must-see TV. And remember, an earnings call wants to strive to be must-see TV and engage as many buy-side and sell-side investors as possible. And a win is when those investors buy into management's long-term vision. Now, if you're on the investor side of the house, there's 5 considerations to be mindful of around earnings. And the first is that earnings in and of itself is not a natural process of a corporation. It takes a lot of extra effort and work to do right. Number 2, earnings calls are not extemporaneous. They're scripted, not off the cuff, because of number 3, Reg FD. You don't want to say something that's not material, non-public information. Number 4, Q&A is prepared and scripted. We come up with guesstimate questions and formulate answers to those questions that's then used to answer the real questions on the call. And then number 5, it's this idea of downside risk. If an analyst is combative or asking negative questions, they're not going to get the question on the earnings call because everything is scripted to prevent downside surprise and downside risk. So what gets prepared in earnings? Well, it starts with process, and a good process is about 3 weeks, and bad process is a day or 2. And the key deliverables are this. You've got a script for the CEO and CFO. You have to do editing that script in conjunction with the C-suite. Then you have a walkthrough or read-through of that script. You have to come up with good financial guidance. You have to come up with industry data to add to the CEO's portion of the script. Then you have to wordsmith. You may spend an hour on one set of words or one word in one part of the CEO's script to get the messaging right. And then you have Q&A preparation. IR is creating the questions and researching and creating the answers to those questions that will then inform how answers are answered on the real call. And lastly, you've got your investor deck and possibly a quarterly earnings deck. And so if you're on the investor side, an earnings process for a corporate professional is synonymous to having 5 companies report on a given day and having an equity capital markets teach-in on top of it. It's a lot of work and a lot of preparation. Everything is scripted for a reason because you want to avoid downside risk and tripping Reg FD. Thanks for watching. Always here to help with your capital markets, investor relations, and corporate finance needs.